Hello and good morning. You're watching Market Cafe. I'm Ankita Saxena and with me Shrishti Sharma. In the next 1 hour, we'll take you through the entire trade setup, the global cues and what all you need to watch out for before the start of this trade. It's a fresh week. So let's see what is in store for the Indian markets. But first up, let's take stock of the US markets and how that fared as far as US markets are concerned. In fact, on Friday, very flat moves coming in as far as the markets are concerned. Let's take a look at Dow Jones Industrial Average. That ended the day, up 48 odd points. S&P 500 was very, very flat with a very marginal uptick of 3 odd points. And Nasdaq Composite, that lost almost 50 odd points, so 2/10% downtick that's coming in. Now remember, we did see that rally coming in on the tech stock. It's a bit of a profit booking that we saw coming in as far as Nasdaq is concerned. Let's take a look at the futures right now. They're barely changed. In fact, they're trading along the flat line. Very flat moves coming in as far as the futures are concerned. S&P, Dow Jones Industrial Average and Nasdaq, very flat moves coming in with an uptick of just 0.1% coming in. Now remember, the Bureau of Labor Statistics had also reported the CPI number, the Consumer Price Index, which measures the cost of goods and services in the US economy. That rose 0.2% in the month of January, reflecting a gain of 2.4% on an annualized basis. The inflation gauge was expected to show a 0.3% increase on a month-on-month basis and a 2.5% advance from a year earlier, according to the economists that was polled by Dow Jones. So we did see, it was softer than what we were expecting. And on the back of that, we did see those moves coming in. And we did see, the CPI that came in line with the expectations. But right now, we have very, very flat moves that are coming in as far as US futures are concerned. So that's how largely the US market shaped up. So very flat moves coming in as of now.
All right, so that's about the US check. But along with that, let's also tell you what really fared up with respect to the commodity world. Firstly, with respect to the crude prices, the oil was largely flat at the start of the week. Traders definitely eyed the US-Iran talks that are scheduled for Tuesday. And along with that, throughout the week, any sort of announcement with respect to Russia-Ukraine is something, I beg your pardon, that the markets will be watching out for. Along with that, with respect to the commodity prices for the precious metal side, yes, of course, we have seen gold that was seen to be rebounding almost 2% from those lowest point after the inflation data kicked in. As of now, gold is trading absolutely flat, while even a bit of a rebound we have seen on Friday when it comes to the silver prices. But for now, a bit of a profit booking. Silver is down almost 2% as we speak right now. Ankita.
All right, so that's how the commodities have fared. But let's move on and talk about the US Secretary of State, Marco Rubio, who has begun a Central European tour, pledging deeper ties with the Slovakia and Hungary leaders who are close to Donald Trump. Meeting Slovakia's Robert Fico and Peter Pellegrini, Rubio focused on energy, defense and NATO commitments. After stressing unity at the Munich Security Conference, he heads to meet Hungary's Viktor Orban as Washington presses allies to reduce dependence on Russian energy.
And Europe is moving to reduce its defense dependence on the US after Trump revived calls to annex Greenland. Now, raising doubts over Washington's commitment at Munich, EU chief Ursula von der warned that key lines had been crossed. Now, Rubio offered limited reassurance, while leaders including Friedrich Merz, Emmanuel Macron and Keir Starmer backed a stronger European pillar inside NATO.
And while Iran says major energy mining and aircraft deals are on the table as nuclear talks with the US resume in Geneva on Tuesday, Iran signals flexibility on uranium limits in return for sanctions relief, stressing any deal must deliver quick economic gains for both the sides. US Secretary of State Marco Rubio says Trump prefers diplomacy but keeps the military options open.
And let's talk about the inflation data then. And US inflation cooled more than expected in January, with consumer prices rising 2.4% year-on-year, the lowest since May. Now, core inflation came in at 2.5%, matching the forecast, while energy prices fell and shelter costs eased. Now, the report from the Bureau of Labor Statistics boosted expectations that the Federal Reserve could cut the rates as early as June.
And China will introduce zero tariffs on imports from 53 African countries starting May in a major boost to trade ties. President Xi Jinping said the move will expand market success and support African development. The policy excludes Eswatini, which maintains ties with Taiwan.
And Xi Jinping has called for domestic demand to become the main driver of economic growth. He urged policymakers to boost the consumption and investment by leveraging China's massive home market. Now, the message signals preparation for the global uncertainty amid rising trade tensions.
And Warner Brothers is weighing whether to reopen sale talks with Paramount Global after receiving an improved offer, according to Bloomberg. The revised bid includes a ticking fee and adding financial guarantees, potentially making it more attractive than the rival Netflix's proposal. Now, Paramount has also agreed to cover termination and refinancing costs, raising pressure on Netflix to sweeten its offer.
And the India AI Impact Summit kicks off, bringing together delegations from over 45 countries and more than 3,000 speakers. Now, global tech leaders, including Sam Altman of OpenAI, Darlo Model of Anthropic, and Sundar Pichai of Google are attending. World leaders, including Emmanuel Macron, Luis Luna de Silva, as well as Pedro Sandris, as well as many other leaders will also be present. Prime Minister Narendra Modi will inaugurate the expo as India pushes for global consensus on AI governance and shared digital commons. Now, let me take it across to my colleague Sumita, who joins in to tell us what to watch out for. Take it away, Sumita.
Absolutely. So all roads lead to New Delhi, here in the national capital, where the 5-day India AI Impact Summit is going to be organized over the next couple of days. And remember, this summit is going to be seeing attendance from the who's who of the tech world, whether it's policy, whether it's governance, whether it's corporates or think tanks. Everybody is going to be here in New Delhi. Remember, this summit is happening in India after it happened in France last year. And of course, this is the first time that an AI summit is happening in the global south. So that is going to be India's agenda as well. And this is something that we've seen with respect to India's policy on AI as well, that AI should be democratized. It should be for all planet and people. And in fact, a democratization of AI and establishing some sort of, common ground as far as principles of AI is concerned, or regulating principles of AI is concerned. That, remember, is going to be the key highlight at this summit. But like you stated, there's going to be Sam Altman, Sundar Pichai. There's also going to be participation from Amazon, from Anthropic's Dario Amodei, like you stated. He's also going to be here. So you name any particular tech brand, and they're all going to be here in New Delhi. Interesting conversations lined up, given the fact that we have over 3,000 speakers. But what's also interesting is that this is not just about technology. This is about geoeconomics as well, because you have the French President Emmanuel Macron, who's coming in tonight to India. He will be in Mumbai, and of course he will be holding a bilateral summit with Prime Minister Narendra Modi, and then later on he joins in New
Right, we will be getting you all the action from the AI Summit, where the who's who of the world and the tech world will be joining in, and it's going to be a confluence of all the tech majors and all the world leaders. And we'll get you more on that as and when the information starts trickling in. But let's move on then. In just another dominant chapter in cricket's biggest rivalry, India outclasses Pakistan by 61 runs in Colombo to storm into the Super 8. Ishan Kishan was the star of the night, smashing a sensational 77 off just 40 balls on a slow spin-friendly surface on a pitch so tacky that Pakistan bowled 18 overs of spin after opting to field. Now, Kishan rose above the conditions to power India to what proved 30 runs above power. The result, well, India made it 8-1 against Pakistan in T20 World Cup, sealing the largest margin of victory in this high-voltage T20 clash. Well, let's go across to my colleague Karishma Singh now, who was at the stadium last night and was enjoying the match. Clearly, we were not Shrishti, but someone who did enjoy. Let's go across to her and find out what transpired live in action.
Indian fans are, of course, very excited with this win. And
Let's go!
what would you say about the win today? How
It was fantastic. We are excited. Amazing, Ashok. Love it, love it, love it. India! 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 India!
a word for Ishan Kishan, the way he played today?
Ishan Kishan played extremely well as throughout the series and last 1 year he's playing very well.
Sir, what would you want to say? Can you say anything? So Pakistan fans obviously very, very sad here. I have some more Pakistan fans that I see. I can invite you to come here and talk about your team if you feel like it. But anything to say?
I think we're very disappointed, and it's been very disappointing. We didn't have the game from the start.
Fans are very, very high on emotions right now. They're, of course, very, very excited here as well. More and more fans coming in, Pakistan fans, like I am saying, very, very sad. There is a little girl here with me. If you could just jump in a little and tell us what is it that you want to say. How did you like the Indian batting today?
I really like it, and I think it was really impressive that we won.
It was really impressive. And do you think India will continue to be the defending champions?
Yes, we will.
Yes, we will. So this is the message from a little girl here. What's your name?
Smriti.
Smriti, who is saying that India will also win this World Cup. More and more visuals here of the Indian team.
All right, so that was the excitement on ground, and of course, we Indians really celebrated the victory. But with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
Welcome back. You're tuned into Market Cafe. We're taking you through all the cues you need to watch out for. And let's talk about the Asian markets and how they have opened up. As far as Asian markets are concerned, well, it is trading in the red. In fact, it's taking a cue from Wall Street. Now, remember, on Friday, on the back of AI fears, we did see that those cuts coming in on the global markets, and that continues today as well. In fact, we look at Shanghai, that's down 1.2%. 51 points down, Shanghai. Hang Seng is also trading lower by 0.1%. We have Nikkei that is seeing the sharpest fall of 0.25%, and 140 odd points it's down. And also we are seeing cuts coming across an S&P ASX 200 also, that is flip-flopping between the red and the green. It is now trading very, very flat. So very flat moves coming in there. But the rest of the market is trading in the red. And if you can pull up the charts for GIFT Nifty as well to see what the indicated start for Indian markets also look like. Well, GIFT Nifty is also painting a picture where we do see GIFT Nifty also trading very, very flat, though it's in the green right now. We do see an implied start which is absolutely flat. So a very lackluster day is what we are expecting on D Street as well today.
All right, so that's about the Asian market check. But with this, let's move on and let me take it across to Snehi, who is here to tell us which are the cues to watch out for the markets this particular week. Snehi.
On the 16th, all eyes are going to be on the WPI numbers after receiving the CPI earlier. You'll have the India AI Impact Summit that's going to be held in New Delhi all through till Feb 20. You've got some marquee names like Sundar Pichai and the NVIDIA top boss coming in as well, Jensen Huang. So watch out for those commentaries and lots of action at the India AI Impact Summit. More throughout the week, of course, the weekly Nifty and Sensex expiries will be at play. You'll also have the HSBC manufacturing PMI numbers along with the Forex reserves data on Friday as well. Shifting focus globally, the US market is going to be seeing a truncated trading week. You'll have 16th Feb that is going to be off for the markets for President's Day. Other than that, you'll have Fed meeting minutes will be out, industrial production numbers, initial jobless claims, trade data, and most importantly, on the 20th of the month, you'll have personal income and the core PCE index, which is the Fed's preferred gauge of inflation, and that is going to dictate policy action going ahead. So lots happening at the Fed, and this is also going to be important to watch out for. Along with this, on the same day, you'll have GDP and the S&P Global Manufacturing PMI numbers too. From UK, it's indicators like CPI, S&P Global Manufacturing PMI, retail sales, jobless claims, and unemployment data all throughout next week. For Eurozone, you have names like industrial production, consumer confidence, and PMI, some data points to watch out for. China, the entire week is going to be closed on account of the Lunar New Year holidays. From Japan, we'll have data points like GDP, industrial production, trade data. Their CPI inflation print will be out as well, along with their PMI numbers. In terms of some big global earnings that we're going to be watching out for, it's names like Walmart, Nestle, and Airbus, among others. But shifting focus back home, the last leg of earnings, so not much to watch out for over there other than names like ABB, CI Automotive, Schaeffler for the week to come going ahead. So that is also going to be important to watch out for. Not expecting a lot on the corporate action and board meetings front, but in terms of the primary market, you'll have two new listings, Fractal Analytics and iFinance, that are going to be making their listing on 16th Feb. Lock-in period is going to be ending for a bunch of recently listed names like Tenneco Clean Energy, so watch out for that. And lastly, in terms of some other events that we are going to be tracking, lots of Fed officials and ECB officials are going to be speaking at various events, so watch out for that. And yes, lots of important commentary also expected. We're also looking at what the Supreme Court in the US is going to rule when it comes to Trump tariffs, if at all they have a potential ruling next week. So watch out for that and all of the other cues very closely.
All right, so those are the cues to watch out for in this week. But let's talk about the stocks in focus for today. For that, my colleague Rabinder is now joining us. Rabinder, take us through all the stocks that we need to watch out for.
Well, yes, some of the capital market stocks like Grow, Angel One, IFL can be in focus, where Reserve Bank of India amendment will be effective from the 1st of April 2026. Ushers in sweeping changes to funding structure, collateral norms and exposure rules within the capital market ecosystem, a move that could reshape the operating landscape for the stockbrokers. And RBI mandate 100% secure funding for the broker with effective from 1st of April 2026, and bank must take full collateral for exposure to brokerages, and broker leverage will likely to be reduced under the new RBI rules. So back of this, all the capital market stocks can be in focus. Keep an eye on Religare Enterprise, where board has approved to demerge Religare Enterprise and Religare Fininvest into two independent listed entity, and Religare Finvest will issue fully paid up equity shares to Religare Enterprise shareholders on a 1:1 basis. Manappuram Finance can be in focus, where RBI has approved a Bain Capital proposal acquisition of 41.6% stake in Manappuram Finance, and with this approval, Bain Capital will be classified as a promoter of the company and will jointly control Manappuram Finance along with the existing promoter. From the pharma space, Natco Pharma can be in focus, where a company has received CDSCO approval to manufacture and market generic semaglutide injection in India, and launch is planned in March 2026 for treatment this will be used for the treatment of adults with insufficiency control type 2 diabetes. Piramal Pharma can be in focus, where the Gujarat Pollution Control Board lifted the closure order on the Dahej plant on 13 February 2026, allowing operation to restart immediately. Keep an eye on HUL, where companies ice cream business Quality Walls India will be listed on exchanges today, NSE and on BSE. Railtel Corporation of India can be in focus on the back of their order win, where company has secured a major domestic work order worth of rupees approximately 93 crore from the Director of Education GNCDG. Gujarat Alkalis can be in focus, where company has started a new hydrogen pipeline at Dahej to supply 20,000 Nm per day to Nosil Limited. Earnings are approximately 9 crore per year for the 5 years. On the back of order win, Ashoka Buildcon can be in focus, where company has secured $45.28 million road upgrading contract in Liberia. Keep an eye on Jubilant Pharma, where USFDA classified its Montreal contract manufacturing facility as OAI. OAI post October to November 2025 audit and remediation steps implemented. And lastly, keep an eye on Bharat Electronics, where board has approved a 50% joint venture with Safran Electronics and Defense to manufacture and service guidance kits for Hammer weapons system for India Defense Forces. So back of this, BL can be in focus.
All right, thank you so much, Rabinder, for getting us that list of counters, but that's not it. Now let me take it across to Ishika, who's standing by with more stocks to watch out for today. Ishika.
Definitely. So let's talk about some of the stocks that have reported significant Q3 earnings this time. We first have Narayan Hrudayalaya. On a negative note, actually, they have reported a top line revenue of up 61%, but their bottom line was seen impacted. Their profitability was down 34%, and margins also contracted by over 600 basis points. Now, next up, we have Jamna Auto. On a good note, they reported a strong all-round quarter with revenue up 19%, profit up 33%, and margins also expanding further. And now we also have Ola Electric in spotlight. Again, another weak quarter. Revenue halved year on year actually, and losses did narrow, but the company still remains deeply loss-making. Next up, we have National Fertilizers. Their revenue is up 17% with profit tripling, and the board has also approved 104 crore capacity expansion at Vijaypur. We also have Tikanagar Industries. They had good revenue, but earnings were slightly amiss. Revenue nearly doubled and EBITDA was strong, but the company swung a loss of 105 crores versus reporting a profit of 54 crores last quarter. We also have Shakti Pumps in news, a negative Q3 results. Revenue was down 15%. Profit, most notably, was down 70% this quarter. And there was also a sharp contraction in its margins. We also have Fortis Healthcare in spotlight, reporting in-line performance with estimates. Revenue up 18%, profit also up 22%, quite satisfactory. Now we have Vikran Engineering, last but not the least, again a negative Q3, profit down over 40%, with margins also contracting more than 750 basis points this quarter. So those are some of the stocks that you should keep a note of today. And back to you.
All right, so those are the stocks that you need to watch out for in today's trading session. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more updates. Stay tuned.
Welcome back to Market Cafe right here on ET Now. And from the ET Now's Global Business Summit 2026, Prime Minister Narendra Modi said that old one-size-fits-all model is no longer relevant as nations now focus on resilience and self-defined growth paths. Let's go across and listen into what Prime Minister Modi said.
साथियों, दुनिया में सेकंड वर्ल्ड वॉर के बाद एक नई वैश्विक व्यवस्था बनी थी। एक नए वर्ल्ड ऑर्डर ने आकार लिया था। लेकिन 7 दशक के बाद वो व्यवस्था टूट रही है। दुनिया आज एक नए वर्ल्ड ऑर्डर की तरफ बढ़ रही है। आखिर ये क्यों हो रहा है? ऐसा इसलिए हुआ क्योंकि तब जो व्यवस्था बनी थी उसकी नींव वन साइज फिट्स ऑल इसी सोच पर टिकी थी। तब ये माना गया कि वर्ल्ड इकोनॉमी कोर में होगी, सप्लाई चेन्स मजबूत और विश्वसनीय हो रहेगी। इस व्यवस्था में नेशंस को केवल कंट्रीब्यूटर्स के रूप में ही देखा गया। लेकिन आज इस मॉडल को चुनौती मिल रही है। ये अपनी प्रासंगिकता खोता जा रहा है। आज हर देश को ये पता चल रहा है कि उसे अपनी रिजिलियंस खुद बनानी होगी। साथियों, आज दुनिया जिसकी चर्चा कर रही है उसको भारत ने 2015 में, आज से 10 साल से पहले 2015 में ही अपनी नीति का हिस्सा बना लिया था। 10 साल पहले जब नीति आयोग बना तो उसके फाउंडिंग डॉक्यूमेंट में ही भारत ने अपना विजन क्लियर कर दिया था। और विजन ये कि भारत किसी दूसरे देश से कोई सिंगल डेवलपमेंट मॉडल इंपोर्ट नहीं करेगा।
Moving on then, from the Global Business Summit, PM Modi also addressed the recent FTAs that India has seen. Let's listen into what he had to say about the FTAs.
साथियों, आजकल आप लोग भारत के एफटीएस यानी फ्री ट्रेड डील्स पर काफी चर्चा कर रहे हैं और मैं यहां एंटर हुआ, वहीं से शुरू हो गए लोग। दुनिया भर में इसका एनालिसिस हो रहा है, लेकिन मैं आज इसका एक और इंटरेस्टिंग एंगल आपको बताता हूं। मीडिया को जो चाहिए वो तो इसमें नहीं होगा शायद, लेकिन हो सकता है कुछ काम में आ जाए। और मैं पक्का मानता हूं जो बात मैं कहने जा रहा हूं, आपने भी इसके बारे में विचार नहीं किया होगा। क्या आपने कभी सोचा है कि आज इतने सारे विकसित देशों के साथ फ्री ट्रेड डील्स हो रहे हैं, क्या यही काम 2014 से पहले क्यों नहीं हो पाए? देश वही, युवा शक्ति वही, सरकारी सिस्टम वही, तो बदला क्या? बदलाव सरकार के विजन में आया है, नीति और नीयत में बदलाव आया है, भारत के सामर्थ्य में बदलाव आया है।
All right, now let's move on to another news flow, and the RBI has tightened funding rules for stockbrokers effective April. Now, banks will now be allowed to lend only against fully secured exposure, banning unsecured or partially secured structures. At least 50% collateral is mandatory, with 25% in cash, while equity collateral will face a 40% haircut. Let me take it across to my colleague Ankur Mishra, who is here to give us more details on the same. Take it away, Ankur.
Yes, Reserve Bank of India has tightened norms for stockbrokers, and the important thing is that 100% collateral lending will be allowed, meaning 100% secure exposure should be there, and you cannot have a kind of promoter guarantee or bank guarantee for the lending. So that restriction is there. Apart from that, even for bank guarantee, now 25% cash is mandated. Apart from that, there is also a rule that equity collateral will attract a 40% haircut, meaning out of 100 rupees shares, only 60 rupees shares will be counted, and banks will be barred from funding brokers' proprietary trading activity. Now that is also a huge blow for the brokers, because that cannot be done in the new norms. Now overall, if you want to see that even the capital market exposure, all broker funding will be treated on that front. So if at all bank is going to that ceiling limit, now the further lending cannot be done to stockbrokers. Now all these rules will be effective from 1st of April 2026, and more likely it is aimed as curbing the leverage and strengthening the risk management as per the norms which has been released by the Reserve Bank.
Right. Thank you so much, Ankur, for joining with that. But the RBI has also eased capital market norms, allowing banks to fund up to 75% of acquisition costs, up from the earlier 50% proposal. Acquisition financing exposure is now propped at 20% of a bank's eligible capital base, which is double the earlier draft limit. Ankur, take us through more details of this story as well.
Yes, even the capital market norms, as I mentioned earlier, for the stockbrokers, that has been tightened, and overall, if you see, the 75% ceiling has been kept, and more importantly, if you see, the overhaul of norms has been done by Reserve Bank of India. Now, for stockbrokers, as I said earlier, the 25% minimum cash should be there. But the LTV has also been revised for capital market exposure, and that is now 75%. Overall, if you see, there is a revision in the norms which has been done by Reserve Bank of India, and whether you talk about M&A financing, whereby now Reserve Bank has mandated that up to 75% lending can be done, and earlier this limit in the draft norms was kept at 50%. Even for the bank limit has been raised, which was just 10% earlier. Now that has been enhanced to 20% in the new norms. So all in all, M&A financing becomes more targeted and easier for the banks.
All right, thank you so much, Ankur, for getting us all those details. But moving on then, and at ET Now Global Business Summit, Union Minister Piyush Goyal also addressed the nitty-gritties of India-US deal. Let's go across and listen in.
We are hopeful to get more aeroplanes into the country, which would be good for our tourism, which would be good for our mobility, hopefully bring down the airfares for all of us to come for the next Global Business Summit, which would open up remote area connectivity into the country. Very easily I can see before my eyes just the aviation sector needing probably $100 billion of imports, Boeing planes, aircraft engines, spare parts in the next 5 years. Before my eyes, I can see our steel industry doubling its capacity from the current 140 million tons to possibly 300 million tons, thereby doubling our need for coking coal imports, which we need for our steel production. We already import about $17 billion of coking coal. We'll need nothing less than $30 billion of coking coal. There are currently two countries mainly which supply coking coal. Now, I'd like you to reflect. Isn't more merrier for us? If there's more competition, if more countries come into play and provide us our needs, will that not give us better quality, better pricing? So we can bring coking coal into the country in a big way. Annually, we will need $30 billion of coking coal. We have just recently in the budget approved a policy to provide tax concessions for data centers. Right up to 2047, data centers being set up by foreign companies in India to provide cloud services for the rest of the world. Now, friends, look at the holistic nature of thinking. These data centers will bring large volume of investment into the country. So we are attracting foreign exchange. These data centers will need a lot of infrastructure to house them, which will provide jobs, which will provide economic activity wherever the data centers are being set up. These data centers will need power and largely renewable energy.
And well, at the ET Now Global Business Summit, Union Minister Ashwini Vaishnav has also stressed on how India is aiming to make strides in the AI sector as well. Let's go across and listen into that as well.
As we all know, AI is basically bringing the fifth industrial revolution. And this industrial revolution is going to be much bigger than the past industrial revolutions, past changes in technology, past major transformations which have happened in the past. And the pace of transformation is also going to be very fast. So we must get prepared for this change. We must prepare our industries for this change. We must prepare our students for this. We must prepare our society for this. And that is why we are working on all the 5 layers of the AI stack. Our focus, our strength has conventionally been in providing the IT services. Now, we have to now convert this strength into providing AI-based services. Our IT industry over the last 1.5 to 2 years has meticulously worked on this changing business model. They have created, they have invested in their reskilling their workforce and creating new tools by which they can now provide AI services. So the way it will work, as I understand from the IT industry, is basically the organizations who are looking for AI-based services, they need people who understand AI, who understand the organization. So that gap between understanding technology and understanding the organization is going to be filled by our IT industry. So I just wanted to share with you how the industry is preparing itself for this huge new wave of innovation, that huge new transformative wave which is coming. The second layer is the model layer, and in the AI Summit, we'll be launching our bouquet of sovereign models. If you would have followed some of these models which have been tested and the test results, on so many parameters, the models are better than OpenAI and Gemini Pro and DeepSeek on so many different parameters. And that's giving us the confidence that we can develop models on very frugal, innovative setups, resources with very few resources. And those models, because of the innovation which has been there in those models, they can actually they can be world-beating models.
All right, moving on. And Lupin CEO Vinitha Kumar and MD Nilesh Gupta throw light on what's next for India's pharma industries and the opportunities that lie ahead for Indian pharma companies. Let's go across and listen into that.
If you take the Patent Act, if you take Hatch-Waxman, these two pieces created eventually the generic industry plus India's role into the generic industry, and therefore the role that Lupin built, the position that Lupin built to be the third largest generic company in the US by prescriptions. So I think policy is extremely important and the like, but there's long-term ramification of this. You're talking about 30 years, right? Even in today's world, you can flash that down to 20 years, you can bring it down to 10 years. It's not 2 years, right? So I think it does work in that. I think the future of Indian pharma is extremely bright. It's not the old playbook, right? And I think the playbook has always changed. I think generics did not exist before '84 and the like. That's when the opportunity came up. I think, thankfully, we have this muscle memory around generics. We know generics like the back of our hand. Therefore, the evolution from generics to complex generics has not been a 20-year story. It's been a 5 or 10-year story in that. And the next big piece is innovation. I think it's something that we've been chasing for the last 5 years. I think it's now time to take some bold bets and get deeper into innovation.
Right. Particularly about US, I'll come to you, Vinitha. The question I was putting, with now India securing a deal with United States, particularly from your point of view, how do you see that it is a kind of relief which has been done? Or when even Nilesh was mentioning, you're not looking at 2 year, 3 year down the line, but policy changes are something which should be long term. But in a world like this, where the announcements are like, we know 1 month something is happening, second month something is happening, how do you adjust to these challenges and how do you prepare yourself?
Yeah, so it impacts the sentiment. It doesn't impact the long term, but the thing is, in our industry, the efforts of what we make today show only like few years from now. It's not, 1 month, next month, right? And certainly with all of the, back and forth that has happened on the trade deal between the US and India, which started on a very, very good note early last year and then went declined. It's great to see us in a place where there's a balance and there's a good starting place with the current trade deal. There's also been a constant exemption for pharma. So while the overall market sentiment got dampened because of the relationship between the countries, but pharma has been tackled separately because it's a very essential industry. And the Indian pharma industry is very essential for the US pharma, the patients and the whole healthcare system. I mean, the Indian companies supply 50% of the prescriptions that are dispensed in the US.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back. All right, welcome back. You're tuned into Market Cafe. We're taking you through all the cues you need to watch out for. Let's talk about the Asian markets now and how they are shaping up at this juncture. Remember, the Chinese market is shut. In fact, it's shut for the week-long Lunar New Year break, and trading will close early in Hong Kong and Singapore. So the Chinese market is closed for the week. As far as Japanese market is concerned, that has slipped in the back of a softer GDP print. Now, remember, we did see the Japanese market rally on the back of that landslide victory by Takeshi that augurs very well for trade in Japan and the businesses there. And on the back of that, we did see, the Japanese markets, the Nikkei, really rally in trade, and that has given up its gains because we did see the softer than expected growth print coming in on Nikkei, Japanese in Japan market, and therefore we do see Nikkei that's down 111 or 13 odd points right now, 0.2% cut coming in as far as Nikkei is concerned. Kospi is also trading down 0.2%, and S&P ASX is also flip-flopping between the red and the green. Right now up just 11 points, so very flat moves coming in. And as far as GIFT Nifty is also concerned, that's also indicating towards a very, very muted start for the Indian market. But let's talk about the stock that will be in focus, HUL, that will be in focus on the back of its de-emerged ice cream arm, Quality Walls India, that is set to list on the exchanges today. The holders have received one quality shareholders will receive one Quality Wall share for every HUL share held. So following the 1:1 demerger. Snehi is joining us with more details of this and the listing. Over to you, Snehi.
Well, yes, so HUL is going to be a stock in focus today. That's Hindustan Unilever, because its ice cream business, Quality Walls India Limited, is going to be demerging and listing as a separate entity on the NSE and the BSE today. Just a little background to bring our viewers back to speed. HUL's board has approved the ice cream business demerger in the ratio 1:1, which means every HUL shareholder who holds one share in HUL will get one share of KWIL, that's Quality Walls India Limited, as well. HUL, remember, started to trade ice cream business on December of 5th December, that's 2025, and the stock that day was lower by about 3.5%. Just some financials then. The ice cream business contributed about 1,800 crores to HUL's annual top line. That's about 3% of its overall business, so not much in terms of that contribution. And from what we understand, 235.95 crore shares of Quality Walls are going to get listed on NSE and BSE today. In terms of new board appointments, Mr. Chitrang Goyal is appointed as the Deputy Managing Director for 3 years. Mr. Prashant Prem Rajka has been appointed as the CFO with effect from December 1st as well. Now, what Nuvama is making of this listing, they believe that Quality Walls is likely to list at a valuation of 5 times EV to sales, which is a discount of HUL's valuations at 9 times EV to sales. The listing price could be anywhere between 50 and 55 rupees. That's Nuvama's estimate. But the broader street chatter is estimating the stock to list anywhere between 45 and 55 rupees. The estimated market cap on listed is expected to be between 12,000 and 15,000 crore rupees. A key positive that Nuvama lists out is it's a leader in the e-com and modern trade space. It owns premium brands like Magnum, Cornetto, supported by HUL's and Unilever's global innovation, and it also has 200K plus cabinets. On the flip side, Nuvama points out some key negatives. They say that high seasonality is something that could ail the business. This is similar to carbonated drinks, beverages, talc, and the summer-related portfolio. Lower margins than some of its peers is what Quality Walls possesses. It trades below Vadilal's 18.5% margins and Halfmore's margins between 17 and 18%, and is likely to invest in more units and manufacturing units and touch points going ahead. So that's the list of positives and negatives from Nuvama, but overall we're expecting this listing to happen anywhere between 50 and 55 rupees per share. That's Nuvama's estimate.
All right, so we will be watching out for HUL in the trading session today. And with that, it's curtains down in this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in.